What's up, everyone? I hope you had a fantastic weekend, and I hope you're ready to roll because I think this week will be filled with a ton of opportunities in the market. Last week, we saw the SPY blast to the upside on Friday, and we have a lot of big events scheduled for this week. Of course, we're still in earnings season, so we have more earnings on the schedule, but we also have crucial inflation data. We have some crazy news on China dumping U.S. holdings, and on top of that, we had some very scary news release after market close on Friday with potential for another U.S. credit rating downgrade. So we have some serious stuff to talk about today. There are some big things unfolding in the market, and we're going to cover all that and some great predictions. So make sure to stick with us all the way to the end. And Tom, let's get right into it.
Yeah, so just to do a quick recap of last week, obviously the market had a great day on Friday, right? Now, there was some pretty crazy news that came out in after hours, which might have changed the sentiment on Friday a little bit, but last week, on Friday, the SPY exploded. It held a 433 support and started really breaking out. Now, Mike, we've been going over these channels here on SPY and QQQ for a couple months now, and what are we getting? We're getting a key breakout out of this channel finally. We broke it last week, and that move up on Friday was the perfect confirmation that, hey, this channel is now starting to break. Now, the question is, how long will this uptrend go? There was some pretty crazy news that came in, but we can even go over to the QQQ, and they also are breaking a key trend that we've been talking about. There's been multiple hits on this, and with that touch Friday, we saw a major explosion come in, and we're starting to see those yields still move down slightly. So far, it's looking great heading into next week, Mike, but as we know, we have this Moody's credit downgrade or potential downgrade, which could definitely throw a wrench into things.
Exactly. So let's talk more about that. So basically, we have the market blasting up, but we have some really bad news kind of unfolding behind the scenes. Now, the first thing I want to do before I dive deep into this article is I want to show a chart of how each credit rating agency scores credit, right? So basically we can see we have Moody's, we have S&P, and then we have Fitch. These are the three major credit rating agencies in the United States. And basically the top rating for all of them is AAA, right? So far, S&P and Fitch have removed the U.S. from that prime top of the top credit rating, and there's only one more agency, which is Moody's, that still has U.S. as a prime credit rating, which is AAA. However, Moody's came out in Friday after the market close. They specifically waited until the market close, which I thought was very telling, before they basically said, hey guys, just giving everyone a very fair warning right now, we are giving our outlook to negative for the U.S. So we're basically saying, all right, we're not going to do anything just yet, but with the way this country's looking, we're going to have to downgrade you pretty soon. So just giving everyone a fair warning now. And this is actually really bad news because the worse credit rating that the U.S. has, the worse it is just for the whole country. It's kind of like having like an 800 credit score and then like getting downgraded to like a 750 credit score. It's like, yeah, your credit score is still good, but that'll make like all the loans you take just a little bit more expensive, and that has a ripple effect onto everything that country is involved in. So it's not a good sign. It's a big risk, and I think Moody's knows that this is a big risk, and I think that's why they waited until the market closed on Friday before they release this news.
Yeah, because Friday was such a good day. I would have actually loved to seen this news be released while the market was open, because with the way the market really ripped up Friday, especially like we go to a 1-minute chart on the SPY, I mean, it was just like a straight up rocket ship the way it was breaking out. Same with the QQQ, and there was a lot of stocks out there fueling this, like Apple, Microsoft, Nvidia, even Tesla had a great day Friday. So we saw all those big moves up, and if the market was open whenever this happened, Mike, I mean, I don't know how far we would have fallen, but that would definitely, I think, have caught traders off guard there. So whenever the futures market opens tonight, as we head into tomorrow, I'm definitely going to watch the ES futures, the S&P futures, and the NASDAQ futures very closely for some crazy movement. And Mike, I'm even wondering if gold might move a little bit. Like, I think this might create some fear, and look at how gold moved up in after hours Friday. This might be a big thing to watch next week.
Exactly. So this news is extremely important. It's not the end of the world, but it is showing some very concerning signs for the country. We're talking about all three of the major credit rating agencies kind of downgrading U.S. credit. That's not good at all, right? So keep that in mind. It has potential to get pretty nasty. But on top of this, Tom, we also actually have China dumping a ton of U.S. securities right now. So basically, China has sold the most U.S. securities in the past 4 years. So that's pretty crazy. They're dumping a lot of our treasuries, and it just makes our rates go even higher. And it shows that China is kind of saying, like, screw you, U.S. Like, we're not feeling as confident in you as we sure used to.
I know, right? It's like there's a lot of reasons why China might do this. Like they might say, hey, we're not feeling as confident in you. They might say, hey, we don't like how you're helping Ukraine or something, or, we want to go into Taiwan, or we have political differences from you. So obviously we might want to hurt your economy a little bit. Maybe they're doing this on purpose in some ways to maybe try to hurt our economy since we did all those tariffs on them or something. I mean, who knows? Maybe this is retaliation for that. We don't really know. But what I will say is they've been reducing for a while, Mike. Like, I can't believe how much they've actually been reducing since like 2012. And our markets have done great since 2012. But over the past 4 years in the shorter term, man, I can't believe how high our rates are getting. Our yields are just insanely high, and it's obviously having a ripple effect, like you said, all throughout the economy. And there's a plethora of reasons why China would do this. Like I said, there's even like political reasons why they might want this.
Exactly. So I really think this is just China playing chess right now. It's not the end of the world for the U.S. economy, but I really think it shows what China's thinking behind the scenes. They're basically slowly becoming less reliant on the U.S. So if they ever did want to, let's say, take over Taiwan, the U.S. will have a lot less leverage over them because China at one point used to own $1.3 trillion worth of treasuries, and now they only own $800 billion. So that just gives the U.S. a lot less power and a lot less ways to hurt them, at least financially. Of course, there's a lot of things that can be done, but I think China's just, kind of just slowly becoming even more independent from the U.S., which isn't necessarily the best thing from the U.S.'s point of view because, whether you're looking at it economically or strategically, just, in terms of control, it's just, it's interesting and it's worth noting.
Yeah, and I'm wondering, Mike, if there is some more tensions that come up with China, I mean, does that ever worry you? Like when you think about like Baba or JD or anything like that, like if they're reducing holdings, does that ever send like a worry? Because I know, you're into Baba quite a bit and a couple other China stocks. I've actually been looking at NEO a lot lately, and, I feel like that could even have a ripple effect into these China stocks.
Absolutely. That's a great point, and you're 100% right. And that's just like part of the risk that comes with those types of stocks, and I think the big money sees that too. And I think that's why they're trading at, such like cheap valuations, because there is that key risk there. But, as long as you can accept that risk, that makes it, it makes it where someone could justify it. But it definitely is a risk, like you said.
Yeah, and like, let's say that we do have a problem with China, right? I think we're going to have a bigger issue on our hands than our China stocks, right? I mean, there's going to be that would be like World War III. So, praying that doesn't happen. But just on the stock side of things, just keep in mind that will add some risk to some of those.
Exactly. And then another thing I want to talk about right now is basically how the market is moving relative to all of the major money printers around the world. So what we can see on the chart right now in red is the S&P 500, and then in blue, it basically shows how much money printing is going on around the world. Generally, as you see, the more money that's printed, as the blue line goes up, the higher the market goes up. When there's like huge times of money printing, like in 2020, that just sends the rocket boosters on full thrust for the market. But at the same time, when the printers turn off and the vacuums come on, as we've seen in history, that can slow the market down, just like we've seen in 2022. What we're seeing right now, though, is something that's very interesting. We're seeing like a huge gap between, the money just getting vacuumed out of the global economy, but we're seeing the S&P 500 and the overall market still pretty close to highs. We know this gap will eventually fill and it'll come together. It's just a matter of what will happen first. What we know is that this blue line is not coming up anytime soon just because of how these central banks around the world are positioned. So that basically means that the red line has to come down pretty soon, which would be bad for the market, or it will just be like a giant multi-year period of just stagnation and flatness. So basically, I thought this was very interesting, and it just shows that we're seeing a gap between the money printing, quote unquote, money printing around the world and the market, and it's a gap that is bigger than we've seen in a while. And Tom, look how big the gap got right before the COVID crash. Look what happened there.
Yeah, exactly. Right there. Right before the COVID crash, it was a huge gap right there. And then we had that big crash come in. The market filled it, and we got right back to that blue line. And even look at 2008. I mean, running into there when the market was dropping. Look at that huge gap, and look at how the market dropped right down and filled the gap, we'll say. It did come back more to normalization after that. But that was whenever the market was in recovery mode then after that. If this red line, like the SPY, were to go retest lows of 2022 or even like the highs of 2020 or something, that would be pretty wild. So I'm really hoping that the market doesn't take a big dip right here. And hey, at least on Friday we got that good move, but Moody's is definitely worrying me for this week to come.
Yep, so we shall see. But for this week, Tom, we also have some more exciting earnings on the schedule. It is like the lineup this week isn't as exciting as last week, but we still are in earnings season. So what's on the schedule?
Yeah, so there's a lot of retailers this week, and I think that's the big thing to understand. Like, we have Home Depot on Tuesday, Target on Wednesday, Walmart on Friday, Macy's, Gap, Ross. Like, these are a lot of clothing stores, a lot of retailers, like Walmart. You go there to buy everything. This is going to be really important. We need to see some good numbers from these companies, and they need to report that spending is staying higher throughout the economy, and I think that they might report that. It seems like spending is still been fairly good for a lot of these companies so far on earnings, so I do like that, but it's going to be big. It's going to kind of show where consumers are at. Now, of course, there's a lot of cool earnings this week, like SE reporting Tuesday before open. That'll be a big watcher this week. Cisco on Wednesday and after hours. Even Baba, Mike, on Thursday in pre-market. So besides the retailers, there's also a lot of like tech stocks mixed in too.
Good stuff. So that will be exciting there. But I think what will be even more exciting is on Tuesday before market open, we have inflation data set to release 1 hour before market open. This will be very important. The Fed's war against inflation has not been won just yet. And all of these inflation reports are so crucial, not only for the stock market, but also the economy as a whole. So that'll be very important. And then, Tom, we also have a couple other events sprinkled in, but I think the inflation report is by far the thing to watch for the week.
Yeah, exactly. Like the inflation report Tuesdays, it's not going to be as big as like Powell speaking, but it might have like a huge implication on the markets given that the Feds will react to those numbers. And what I'm happy about is that the core inflation rate month over month and even the year over year inflation rates are kind of expected to come in a little bit lower, which is nice. Like look at that 3.3% forecast on the inflation rate year over year, 3.7% on the previous. So maybe we'll see inflation come down and it'll show the Feds are kind of getting the job done. Hopefully that's the case, or else, everybody talks about more possible rate hikes or, cutting rates sooner or, I'm sure there'll be all types of talks on Tuesday. So be ready, but Wednesday as well. But that's enough with the boring inflation stuff for the episode.
All right, well, let's get right into the fun stuff then, which are some setups for tomorrow. I'm watching QQQ very closely, and I definitely have a little bit of a bearish tone with this one. And I know it had such a fantastic day on Friday, but this credit rating news isn't necessarily the best. And if we do see QQQ turn to the downside, I will look to play to the downside. So I would love to see like a break below like maybe like 374, maybe 374.80. And I'd love to ride that momentum down, but we would need to like see it like start to turn over. Like I don't think this is a play where it's just like blindly short QQQ because we all know how powerful this ETF is. But if we see weakness come in, I think it can really get pretty nasty.
Yeah, I mean, I don't know what happened Friday, Mike. I mean, yields were down and the market was pulling back Thursday. I really thought Friday was going to be another red day where we had another pullback, but oh my gosh, the way it held support and bounced to the upside really blew my mind. I definitely hope that we start to pull back soon, given how overextended the market is. We're to the point where it's like, how long can this continue? But then again, it's like every day there's like another bullish sign where it's like, the setup's great to the upside, but everybody's kind of getting worried now. So I'm with you there, Mike. I'm definitely waiting for a pullback. With my first play, I'm going with Citigroup, and I'm actually looking at them to the upside. I noticed last week they held their ground very, very well. And let's say that the market does continue to break out here and yields keep falling. I think that'll be great for banks. So I'm going to watch Citigroup. It's getting close to that upper echelon of last week, like right around 42.40, 42.50. So if we're able to break that level, then I'll look at calls. And it doesn't mean I'm just looking at calls on Monday. I'll place like an alert right here. I'll actually do it live, and I'll just start to play the breakout when it happens. It might happen Wednesday or Tuesday, but I'll be watching for that breakout this week.
I like it. Yeah, I'll keep a close eye on that one as well. Another stock I'm watching is Disney to the upside, and this one had a great reaction to earnings, but kind of disappointed everyone on Friday. But if we can get back to like that, like $89.50 to like $90 level with some good momentum and volume, I would love to play this one to the upside again.
Yeah, come on, Disney. Keep up with that earnings continuation. It was doing great last week. Maybe that was just a pullback. And, sometimes we see these things really continue over the next couple weeks. So I'm with you, Mike. I'll definitely keep it on the radar. And I'm going to go with another stock, Southwest Airlines, that I actually talked about last week as well. I was looking at the daily chart, and I noticed that this stock was bouncing off of support from 2001. This is weird. I have to go all the way out to like a weekly chart and scroll so far back to get that support level, but you can see all those red arrows here pointing to that support. So if we continue to hold this level, I think there could be more green coming in next week for this stock, and I'll just continue to look at calls up off of support.
Great stuff. So keep a close eye on that one as well. But I'll say if you guys are looking for short-term trades, you have to check this out. For those of you who don't know, we released a brand new software last week called SurgeBot. It's a piece of technology I've been working on for a very long time, and people have been crushing it with this. It is absolutely insane. Looking at the profits channel from Friday alone, there were so many giant gains. We had Steve V with the 600% winner on TSM. We have Profit Hunter with great profits on SPX and Coin. We have Simp just crushing it as well, and a bunch of other people. This technology is the most powerful piece of technology I've ever seen for the stock market. Even on Friday in the market analysis channel with SniperBot, we had a TSM call option go from 148 all the way up to 335 all within the same day. Our bots have been crushing it ever since we did this recent update. It is insane. If you want in on the action, check out that first link in the description in the comments down below. Like I said, this is the craziest technology I've ever seen for the market, and I really can't describe it better than that, Tom. It's doing insane.
Man, it's been a badass launch last week, and I'll say this, Mike, I even love the daily recaps you give. You go over how some of these moves happened. If traders are new, they can watch these and maybe kind of say, well, hey, I don't know how to use SurgeBot now. Check out the market analysis tab. Mike posts a daily recap of a play that the SurgeBot had every single day and kind of goes over it. So come in, get some education, start looking at the bots a little bit. Man, the SurgeBot's great, Mike, and even the updates to SniperBot, I mean, they look beautiful there on Friday.
There we go. And Tom, while we're in the Discord, we might as well give a shout out to today's member of the day, which is Steve V. Great work on Friday, and keep that momentum rolling. And I saw that Steve actually attended our live event on Wednesday. So if you guys do want to join, you'll also get access to our live events, our live Q&As, and our live education sessions. And if you're willing to educate yourself, we have all the opportunities and all of the software you could possibly need. So again, it'll be that first link in the description in the comments down below. But back to the video, and it is now time for today's momentum plays. And with the first one, we have the powerhouse Apple to the downside.
Yeah, Apple and Mike, you really threw me off to the downside here. This thing's on fire, but with that Moody's credit rating cut and with how overextended it is, I could see a pullback. Now, I'm going to watch this intraday support around 186. If we're able to break like 185.90, which is just under that support, then I'll look at some puts to the downside. Now, this doesn't mean that I might think Apple's going to go all the way down, but just watch for that break and maybe get a good scalp in.
All right, with the next one, we have Tesla also to the downside.
TSLA, yeah, pretty big stock here on Friday, and I love this support here as well. Go ahead and make them break under 213.50.
All right, and then with the last one, we have Coinbase for both directions.
Yeah, coin could be great. Bitcoin was doing pretty well the past few weeks, so I'm hoping they can start to pop off again. If Coinbase breaks above 94, go ahead and look at calls, but if they break under the 91 support, then I up those puts.
All right, so we have the downside level for puts for Coinbase and then also Apple and Tesla. We also have the upside level on Coinbase as well. So these plays are only plays if they break the levels Tom listed. They all have downside potential, but only Coinbase has the potential breakout to the upside. But with that being said, let's jump right into today's big money $1.2 million trade of the day. And we are looking at ticker symbol Disney. So Disney really had a major shift of momentum last week to the extent that we've not seen in a very long time for that stock. And in turn, the big money put $1.2 million into Disney and into a Disney options trade to the upside. Now, this is a somewhat advanced trade, but we're going to break it down in a nice and simple way. Basically, they bought the Disney 90 strike call options and shorted the 120 strike call options, both of which expire on September 20th of 2024. This is a call debit spread. Basically, they want Disney to go up. If you want to keep your life nice and easy, you could literally only buy the 90 strike calls for September 20th of 2024, and the trade will be very similar. I like this setup quite a bit. I think Disney is seeing a shift in momentum that it hasn't seen in a very long time. I think the risk reward is great here, and I'm a fan of this big money trade. All I'm going to say, though, is if you do follow it, give it time. Don't expect Disney to be up 20% this week. It can take weeks to months to play out.
Yeah, and after last week with earnings, if you didn't know by now, I love Disney, right? Like, I have a high bias towards Disney, so of course, I'm going to love these calls. But I don't just love calls all the time on stocks I love. What I really like about this is Disney's at that $79, $80 support, which has been in place since like 2014, and it was also the COVID low. We're bouncing there. And what else is coming out this week? Bet ESPN is actually set to come out on Tuesday. So I don't know if the big money wanted to make sure that they entered this before Bet ESPN ended up releasing or not, but either way, that might help Disney and it might even help Penn Gaming next week. So I'll be watching those two stocks closely as well. We'll talk about that a lot more on Monday, of course, but as I'm looking at Disney here, it's definitely on support, and I like these calls. Just keep in mind, they have a lot of time to them. If you buy these, you're probably going to have to hold them until like February, March, April, May, at least to there next year. I don't know how long the big money will be in this one, Mike, but probably quite a long time.
Exactly. So keep a close eye on it. It's a interesting big money play, and I think it has some potential. But with everything being said, Tom, we have more earnings for the week. We have key inflation data. We have potential for another U.S. credit rating downgrade, which would be a very worrying sign if it actually does happen. We have the market that is just ripping, but also is getting to the spot where it's pretty overbought. I think this week will be very exciting. I think it'll be very telling, and I think no matter which direction it goes in, I think there's going to be a lot of opportunities, just given how much volatility and the type of volatility that we've been seeing lately. So I'm very excited, and I think it's going to be a great week.
I do too, Mike, and I'm really watching the market here very closely, and I know that we say this a lot, but it's just so important to be adaptable, right? Like, the QQQ is breaking a big trend. It's starting to run. The SPY is breaking a huge channel on the hourly. This is usually a very bullish sign, and we saw a lot of bullish activity on Friday, so I actually wouldn't be surprised if the market continued up for a couple days, but that'll give some good day trading opportunities. But I'm not a big fan of swinging right here, given how high the market already is. So I'm kind of conflicted, but we are getting a lot of bullish activity. So I'm very conflicted this week. We really need to see that inflation data come in well on Tuesday. And, on top of that, we have all these big retail earnings this week. So like you said, it's going to be a big week, guys. Smash that like button down below if you haven't yet. Let's have a good one out there. Hopefully the Surge bot can take advantage of these opportunities.
Absolutely, yeah. If you guys want in on the action, check out that first link in the description in the comments down below. This technology is insane, and it crushed it all week long last week. So definitely check that out. Besides that, if you're new to the channel and you liked our video, make sure to subscribe. We post brand new videos all the time, and it takes us hours to make these videos. We comb through hours worth of information to only provide you guys the most important information. We also showcase charts that you won't find anywhere else, and we try to make this all into like a 20 to 25 minute video. When you subscribe, you'll see our videos recommended to you more often. But besides that, let's have a great week.